Let's get ready to mortgage. He is the prince of programs, guru of guidelines, master of matrices. He puts the fun in funding. Please welcome Mark, Mr. Mark-eitel.
All right. My name is Mark-eitel, and you are listening to the Mr. Mortgage Show. And you, my friends, are in the right place if you want the data, the information, the tips, the tricks, the strategies that you need to go out there and make better real estate and mortgage decisions for you and your family. And I get it. There are a ton of crazy headlines swirling around out there about real estate, affordability, housing crash, interest rates. Is it a good time to buy? Is it a good time to sell? Is this 2008 all over again? You've heard me say it before. We're going to dive into all of that. We've got a great show lined up for you this week. I am joined in the studio by Jennifer, my lovely producer, and she is womaning the Anytime hotline. So, you know, you can always get your questions on the air by calling or texting the Anytime hotline, and that number is 855-462-7292. That's 855-462-7292. That is the Anytime hotline, and Jennifer will get your questions on the air, or you can go to www.mr.mortgage. Upper right-hand corner of the website, there's a contact us link. Just type your question out there, hit submit, and we'll get it on the air. So mr.mortgage, never a .com. Just type in mr.mortgage, and we will pop up. I thought that was the coolest website in the world when I got that. No .com, just mr.mortgage. But man, people have a hard time getting that right the first time. So again, no .com, just type in mr.mortgage. But yeah, we do this each week right here, same time, same station. I'm always surprised when Greg puts us back on the air. I guess that means last week was okay. So we're excited to be with you. We really enjoy being here, being part of the community. We are broadcasting live from the Mr. Mortgage Studio down in Martin County, but we are a big part of the local community and blessed to be here. So we're going to dive into the headlines here in a second. We're going to get to your questions after that. I'm going to throw the Anytime hotline out there one more time so we can get some questions lined up for later in the show. That number is 855-462-7292. And again, Jennifer is womaning the hotline, and she'll get your questions on the air. So, hey, before we get started, I just wanted to give a quick shout out to the guys over at Suncoast Pressure Cleaner, Paint Sprayer Pressure Cleaner Shop over there on Bayshore. Those guys are awesome. Got my pressure cleaner fixed, so I will have the cleanest driveway in the neighborhood this weekend. So check them out if you're in need of that kind of stuff. They've got pressure cleaners, paint sprayers, and they fixed me right up. So let them know you heard about them on the show, because I did tell them I was going to brag about them when I was in there the other day. So anyway, on with the show. I always like to start with the headlines. You know, I share it every week. The headlines often contradict themselves. And this week was no exception. They did not let us down. I found it super interesting that last week after that inflation number was released, I think it was what, 8.6%. I don't remember. I have to pull the data, 8.5 or 6%. President Biden came out and said inflation was 0%. And I kind of scratched my head, and he said it again. I think he said it 4 times in that little 16-second clip that I saw on YouTube. But interesting, that take on things, that inflation was 0%. And I get it, right? In some convoluted way, if you pull out this and subtract that category, you could say that it was 0% month over month, but still well into the mid 8% range year over year. And the Federal Reserve minutes were released yesterday. And the Fed basically said, guys, until we get this inflation under control, interest rates are going to continue to rise. And, basically the minutes were dissected and confirmed that. So I was confused. Wait a minute. President Biden said 0% inflation, and now the Fed says we still have inflation that we've got to get under control. So it's a confusing time out there. A recession is no longer a recession. Inflation is no longer an inflation. A boy is no longer a boy. A girl is no longer a girl. All I know is it's still more expensive this year to live than it was last year. And real estate's no exception. You know, there were a ton of headlines around real estate this week, and they were talking about, housing inventory numbers are up, right? Which basically means more houses coming to the market for sale. And we've heard for the longest time that we had not enough supply. So seeing inventory numbers tick up is an encouraging thing. But you read that in conjunction with articles that say things like sales volume is down, the number of people reducing their asking price, that number is up. And you start to digest all of this, and then here comes another article that says mortgage applications fall to a 22-year low. And suddenly this picture of a housing slide starts to paint itself pretty clearly. But here's the thing, guys. All of that is true, right? There's more houses on the market for sale than there were last year. There are fewer houses selling per month this year than last year. More people are reducing their price. Absolutely true. But here's the thing. The closed transaction price, the actual traded price, the sales price, is still up year over year, almost 15%. And I'll post this article to the Facebook page. It was in Realtor.com, in the Realtor magazine, almost a 15% year over year increase. So that's one more place that the headlines can be super deceiving if you don't take the time to dig into the data and read the data supporting the article, because all of that on the surface leads you to believe that, we're going to tip into a depreciating cycle in real estate, and we're just not seeing that. And I've talked about it in length, and I'll post the video to the Facebook page again, where I dig into why this market is different than 2008. And hey, guys, I was here. I started in 1999. I was running my brokerage shop during the housing run-up and then the crash and the Great Recession. I saw it all firsthand, and it feels the same, right? It does. It feels very similar, but the fundamental reason we're here is very different. And I'm not going to belabor this because I'm going to encourage you to visit the Facebook page and watch the video. But I will say that the loan products that were available in the early 2000s, stated income, stated asset, 100% loan to value. Heck, there was a 103% loan to value product. We were able to finance some closing costs. It was nuts. All of that caused false demand, right? So people were buying 6, 8, 10 properties. They were flippers. These were instant real estate investors. Well, what happened in a nutshell was the secondary market dried up for those risky loans. And then all of a sudden, one guy was selling 8 properties. One guy was selling 4 properties. And, go back and visit the movie The Big Short or Margin Call. You'll see what happened. But that's where the similarity stops. The fundamental driver this time is genuine demand. These are well-qualified borrowers. They're documenting their income. They're documenting their assets. They are fully underwritten. They qualify for the loans, and they're able to make the payments. So even in the height of all of this crazy appreciation, the people that are buying real estate right now are either paying cash or they're getting loans that they're fully qualified for. So as long as unemployment remains low, we got a healthy job market. People are they're going to be able to afford to pay their bills. So I don't see a crash looming anytime soon. We watch it every day. We're going to bring it to you first if we start to see things slide. We're seeing things cool, but they're still going up in value, and there's still robust activity in the housing market. And right now for buyers, they're having opportunities. There's choice between properties. They're able to negotiate a discount or ask the seller to pay for closing costs or even buy the rate down. So that level of participation on both sides of the transaction is super healthy, and it's a good thing, and we've needed to get here. So even if we get into a low single digit appreciation cycle, buying real estate still makes sense. You're going to go home. You've got to go home somewhere. You're going to pay your mortgage or your landlord's. It's up to you to decide. So I share all that just to encourage you that it's not as bad as the headlines indicate. So we're gonna keep diving into the data this week on the show, and we're going to get to your questions. So I encourage your questions. If you got questions, I encourage them. Call or text 855-462-7292. That's 855-462-7292. That is the Anytime Hotline. And hey, you hear the music coming up behind me? That means we're going to jump into a short break. We'll be back in 2 minutes to deep dive the data and take your questions. Hang in there. Hey, it's Mark Eitel, host of the Mr. Mortgage Show. You hear me all the time talking about the need to have the very best team representing you in a real estate transaction, and that starts with a really great agent. If you've got a great agent, that's awesome, but if you don't, check out www.reallyGreatAgents.com. There you'll find the best of the best, regardless of the city they work in or the brokerage they work for. www.reallyGreatAgents.com, www.reallyGreatAgents.com.
Here's another 5-star review.
We started our loan with a different company. They said we were approved, but at the last minute they told us there was a problem. I still don't know what went wrong, but thankfully our real estate agent told us about Mark. I was pretty stressed, but it's the perfect house, so we gave Mark a shot. He got it done. I'm not sure what was different, but I don't really care. We even got a better interest rate and with less money out of pocket than the first guy quoted us. It was a great surprise. Yes, I'm happy to recommend Mark and his Mr. Mortgage team.
Hey, it's mark-eitel here, host of the Mr. Mortgage Show. And you've heard me talk about the valuation tool that we use in our lending practice almost daily. It's not quite an appraisal, but it's way more accurate than one of those online estimates. And we're happy to run one of those reports for you at no charge. Just visit freevaluereport.org. That's freevaluereport.org. Give us a little information about the property, and we'll be happy to send you your report. That's freevaluereport.org.
Are inflation and everyday expenses eating into your retirement income? Maybe you've considered a reverse mortgage and have unanswered questions like, do I still own my property? Can the bank kick me out? What happens when I die? Can I still leave my house to my kids? These are all great questions. Visit www.moreaboutreverse.com to learn more. That's www.moreaboutreverse.com. www.moreaboutreverse.com.
Welcome back to the Mr. Mortgage Show. Call us now at 855-462-7292.
All right, we are back. My name is Mark Eitel, and you are listening to the Mr. Mortgage Show. And hey, you heard Ike the announcer. You want your questions on the air? Just call or text 855-462-7292. That's 855-462-7292. That is the Anytime hotline, and Jennifer will take your call and get your questions on the air. So I'm super excited to be with you. I know she's in here already hot on the telephones over there, so I think we've got some questions teed up. But hey, I shared all that at the beginning of the show just to encourage you that there's data supporting real estate still being a smart decision if you're buying. And, you know, you heard me say it, you're going to pay your mortgage or your landlord's. It's up to you to decide. And I don't say that, you know, tongue in cheek. That's basically the reality of things. And I've talked about it a lot in the past. Supply and demand is what controls pricing, not interest rates, not economic policy, nothing more than supply and demand. And, you know, we talked about buying sanitizer during COVID, during the pandemic, and what people were willing to pay for sanitizer and the off brands. And, you know, it was practically like a drug deal, meeting somebody in the parking lot and overpaying for sanitizer. It got super surreal there for a minute, but I share all that only because in the real estate world, it's no different. You know, even though inventory is coming to the market, even though prices are starting to stabilize, we're still seeing year over year appreciation, and there still appears at this moment to be more demand in the market. Now, it's definitely shifting, but we're not in an oversupplied market at the moment that's going to cause pricing to erode. And I shared that bit about what was different in the last market. The fully qualified, able to pay their bills borrower of today is very different than the speculative borrower of the early 2000s who was utilizing those easy money liar loans to buy property. So for a host of reasons, but underpinned by what I just shared, I think for the time being, we still remain in, yes, expensive, yes, uncomfortable, yes, frustrating housing market, but still we don't see the market tipping to a downward spiral anytime soon. So anyway, I welcome any conversation around that. If you want to chop it up off the air, I'd love to have a conversation with you about it. I'm always fascinated to learn other people's opinions. But in the spirit of the show, we do this each week to take your questions and to try to give you the information that you need. So let's do that right now. Hey, Jen, do we have any questions teed up?
Poor St. Lucie has questions.
Okay, great. So, let's jump in. Let's start. What's the first one?
Jeff is asking, my realtor is telling me my house will be hard to sell because the roof is 24 years old. She says it will be a problem with the insurance. I have insurance now. Can a buyer just use the same company I have? The roof doesn't leak. It's just old.
Okay, that is a great question, Jeff. And yes, so super frustrating, right? Because the roof's not leaking. In your mind, there's not a problem with it. But your agent does have a point, because right now insurance companies are looking at the age of the roof with a lot of scrutiny. And there is a necessary, I'm trying to remember the actual terminology, useful lifespan, I believe is what it's called, the technical term, in an inspection report, either a wind mitigation report or a 4-point inspection. They're going to call out the condition of the roof. And if the expected lifespan of that roof is less than 3 years from where it is now, you can't even get an FHA loan on it. But the older the roof, the closer it is to needing replacement, it's going to be more difficult to insure. And at very least, you're going to be paying a higher premium. Now, that being said, we've got some rock star insurance agents that we refer to, and I'm happy to get you and your agent in touch with an insurance agent who may be able to help with a competitive quote so that the buyer has less of a hurdle to jump with the age of the roof. But just know that in this market in particular, it has a lot to do with the abuses in the insurance industry of late, and a lot about the claims that were made for full replacement of roofs in the past. But the insurance and age of roof right now, as well as hurricane protection, is always a big challenge. So I'm not saying that you won't be able to sell your property because the buyer is going to be unable to get insurance, but your agent does bring a valid point up that age of roof is a bit of a challenge. And we're seeing some contracts even be negotiated where the seller is replacing the roof prior to closing. I'm working on a transaction right now. It's out in Okeechobee County. And I don't know how the agent did this. And this is another reason why you want a really great agent on your team. But they were able to negotiate not only a seller contribution, but the seller to replace the roof prior to closing, which is great. It's posing a bit of a challenge because we're having to extend timelines to get that roof replaced. I think they thought it was going to happen quicker than it actually is. However, it's amazing that the seller is not only, they reduced the price, they gave a concession, a closing cost concession, and they're replacing the roof. So I was really surprised to see that, and it just goes to show you that having a rock star on your side negotiating for you can make a huge difference. So I know I share that only because it made me think of it regarding the roofing issue, and I do know that that is going to continue to be a sticking point with insurance moving forward. So that's why we surround ourselves by several insurance agents that we can refer to so we can get some very competitive quotes to try to help people get into the property and have an insurance policy that's not choking them. Now, that's not to say next year your carrier could increase your policy. They could drop you. They could do a site inspection to confirm condition. There's a lot going on in the insurance space. So anyway, Jeff, that was a fantastic question, and I appreciate it. I hope that helped, and you can always reach out to us if you need more information. But so let's keep the train rolling, and let's throw it over to Jen for another question.
Kelly sent this one. We are thinking of selling our house without an agent, but aren't sure what we should price it at. Is there something better than a Zestimate?
Hey, Kelly, that is another good question. And the dreaded Zestimate, right? Everybody likes to hit Zillow over the head with a stick, or at least in the real estate world, they do. So yes, we have a more accurate, at least in my opinion, a more accurate data set that we can help you with there. Sometimes the Zestimate is pretty darn close. So it's not always way off, but when it is, man, it can be way off. So let me throw this out there for you, Kelly. We use a desktop valuation tool all the time. It's a Canary Data Report. It's a lender tool to get, kind of a quick valuation of a property. But anyway, I'm happy to make that available to you. If you hear the commercials for it, it's the freevaluereport.org, freevaluereport.org. And just give us the address of the property and an email address to send the report back to. We'll run the report. It's pretty darn accurate. It's not an appraisal, but it's pretty darn accurate. And, head to head, I think it's a little better than the Zestimate, but it's a robust report. It's, I don't know, depending on the property, it can be 10 pages. It's usually somewhere between 8 to 10 pages. A lot of data in there, and it'll give you a pretty good idea of a starting point with price. And then you hear me all the time talk about, really great agents and how somebody can make a difference. If you get into the process of selling it by yourself and you feel a little bit overwhelmed and you want a referral for an agent that can help, give me a shout. I'll get you in touch with somebody right here, local, that can jump in and make the process smooth. But I get it. I totally get trying it yourself. The opportunity to save the commission is appealing for a lot of people. But I also know, too, that a lot of people will get into it and find it a little bit overwhelming, or sometimes very overwhelming, and end up hiring a real estate agent. But I share that only because if you need somebody, I can introduce you to a really great agent. But in the meantime, I would be happy to run one of those value reports for you. And also, too, the question before from Jeff was talking about insurance. That value report can be helpful, too, if you're evaluating your insurance coverage and you just want to make sure that you have enough coverage. We can run that report for you, too, to give you an idea of what the fair market value of the property would be. So anyway, check out freevaluereport.org. That's freevaluereport.org. And like I said, just an address and an email address, and we'll shoot you back that. But hopefully that helps. I know a lot of people who successfully sell by themselves, so I wish you luck, and am happy to help along the way if you need some assistance or you have additional questions regarding that. So hey, you hear the music sneaking up behind me. You know what that means. We're going to jump into another break. We'll be back in 2 very short minutes to take more of your questions. And you can get the questions on the air by calling 855-462-7292, 855-462-7292. Sit tight, and we will be back in 2 very short minutes. Hey, it's Mark Eitel, host of the Mr. Mortgage Show. You hear me all the time talking about the need to have the very best team representing you in a real estate transaction. And that starts with a really great agent. If you've got a great agent, that's awesome. But if you don't, check out www.reallyGreatAgents.com. There you'll find the best of the best, regardless of the city they work in or the brokerage they work for. www.reallyGreatAgents.com, www.reallyGreatAgents.com.
Here's another 5-star review.
We kept our business above water with credit cards during the pandemic. I'm glad we did. Business is better than ever. But I didn't want to be a slave to those credit card payments. I called Mark about the REC loan he advertises. Long story short, we did a REC refinance and paid off everything, even the car. Now we only have the mortgage payment. We're saving a bunch every month. Yes, we are happy to recommend Mark and the Mr. Mortgage team.
Hey, it's Mark Eitel here, host of the Mr. Mortgage Show. And you've heard me talk about the valuation tool that we use in our lending practice almost daily. It's not quite an appraisal, but it's way more accurate than one of those online estimates. And we're happy to run one of those reports for you at no charge. Just visit freevaluereport.org. That's freevaluereport.org. Give us a little information about the property, and we'll be happy to send you your report. That's freevaluereport.org.
Are inflation and everyday expenses eating into your retirement income? Maybe you've considered a reverse mortgage and have unanswered questions like, do I still own my property? Can the bank kick me out? What happens when I die? Can I still leave my house to my kids? These are all great questions. Visit www.moreaboutreverse.com to learn more. That's www.moreaboutreverse.com. www.moreaboutreverse.com.
Welcome back to the Mr. Mortgage Show. Call us now at 855-462-7292.
All right, we are back. My name is Mark Eitel, and you are listening to the Mr. Mortgage Show. And we do this each week right here, same time, same station. We dive into the data. We answer all your questions. I've got the lovely Jennifer, my producer, in the studio with me today, and we are broadcasting live from the Mr. Mortgage Studio down in Martin County, and happy to be with you. So if you have questions, you can call or text 855-462-7292. That's 855 888-462-7292. Jen will take the call and get your questions on the air. If you want to check us out online and send your question via email, just visit mr.mortgage. That's www.mr.mortgagenever.com. Just type in mr.mortgage. In the upper right-hand corner of the page is a Contact Us button. Click that. You can submit your question through the website. She'll get it that way too. So, and you hear me all the time talking about the data. If you want to feast your eyes on the data for yourself, check us out at Facebook. Go to Facebook and search The Mr. Mortgage Show, The Mr. Mortgage Show on Facebook. I post all of the charts, the data, the articles, all the stuff that we're referencing. Heck, I might even post that video of President Biden saying 0%. 0% inflation, zero inflation, zero inflation. He said it about 4 or 5 times. I wish if you keep saying it was the truth, but apparently the Fed sees the need to continue to raise interest rates because we are still experiencing inflation. But anyway, all of those articles and those videos I'll post to the Facebook page too. And lastly, if you like what you hear and you want to hear more of it, check out Mr. Mortgage Radio. That's mrmortgageradio.com. We post all of the show replays, all of the podcast episodes. I think there's over 60 episodes up there now. So, yeah, you can binge out on the Mr. Mortgage Show if you've got absolutely nothing better to do. But, hey, let's keep your questions. Keep them coming. Let me throw it over to Jennifer and see what she has.
Mike sent a text. How fast can I get a mortgage from start to finish? I'm almost 2 weeks into the process with my bank, and they're telling me I no longer qualify. Can you help?
Hey, Mike, we might be able to help. It's interesting. So this happens a lot, and it's not, more times than not, it has nothing to do with the creditworthiness of the borrower. It's just a program guideline, or better said, a program overlay. Everybody underwrites mortgages to a hard and fast set of guidelines. And you'll hear things like Fannie Mae, Freddie Mac, FHA, VA, USDA, non-QM, all of those different loan products, if you will, all have a printed, bound, published set of guidelines. And lenders, each individual lender who's lending against those guidelines has the opportunity to put in place what's called an overlay, which is a temporary, often more restrictive guideline. And they do that because they want to maybe pump the brakes on a certain type of loan product. And here's a place we see it a lot. VA loans, the VA loan has no minimum credit score requirement by the VA to fully insure a loan. However, lenders are free to set their own minimum credit score. And that's where you'll hear somebody say, okay, we lend down to a 580 credit score VA. And then someone else will pop up and say, well, we'll go down to a 540. And then a bunch of lenders may be at 600 or 620. The reason is they have a set of overlay guidelines that are temporary, more restrictive guidelines. So I say all that only to share that in this instance, Mike, it might have nothing to do with you, your credit worthiness as a borrower. It may be a property type. It may be a circumstance surrounding loan to value. It may be a circumstance around credit score. A lot of times it's property type, and we're seeing it oftentimes pop up with manufactured housing because during the height of the pandemic, a lot of lenders put overlays in place on, for example, for a period of time, a lot of lenders would not fund an FHA loan on a single wide manufactured home. Well, the FHA guidelines don't restrict that. There's an age restriction. It's got to be newer than July of 1976. So I just say 77 to be safe. There's no guideline to single wide or double wide. And a lot of lenders said, okay, we're only going to do double wide. We're only going to do, there's even some lenders still that have overlays in place. They won't fund on a manufactured home that's more than 10 years old, even though the published guidelines go all the way back to 1977. So I share all that, Mike, just to first give you some hope that it may be just an overlay that your lender got wrapped around the axle with. But to answer your question, depending on where you are in the process with having your documents together, it's not uncommon to jump in, and you're saying you're 2 weeks into it. So I'm guessing that you probably have somewhere around 2 weeks left in your contract, because most contracts are written around 30 to 40 to 45 days. If that's the case, 2 weeks is not out of the realm of possibility. I mean, we've done, 8 days start to finish. It's a full-on fire drill, and it's no fun, but it's doable. But in this instance, with 2 weeks or more left, depending on where you are with your documents and can submit them quickly, and that you are qualified, and it's not a circumstance that has anything to do with you, and it may in this instance just be an overlay. I think you have a shot at this. I would look for things like, when does your earnest money go hard? So by go hard, I mean become non-refundable. So oftentimes in a real estate contract, you'll have, 10 days or 15 days due diligence to do your home inspection, to do whatever you need to be comfortable with the property. The appraisal is now part of the loan commitment period, but you typically have, a window of time to do your due diligence. So that would be my biggest question to you at this moment is, when does that inspection period, if there's one in the contract, expire, so that that, once you get past that time period, you're unable to cancel the contract without losing your deposit. So I share all of that only to suggest that you're going to want to dig into the details, the dates associated with all of the milestones that you are required to hit. But to answer your question, 2 weeks should be enough time to accomplish a start to finish closing. And like I said, we've recently did one in 8 days, and it was a full start to finish 8 days, including the appraisal. And it was, as I mentioned, a fire drill, and it was stressful. But this gentleman was driving across the country in a U-Haul with his son, and they were relocating, and the son was going to start school. This just happened 2 weeks ago. And, we were blessed to have the opportunity to get it done. But as I mentioned, it was a crazy couple of days. But yeah, he got in the house and he didn't lose his deposit. His son started school this week, so he's super happy to be relocated to Florida, and we were happy to be a part of that for him. But I share all that just to say that it can be done in a hurry, and if you are ready to go and you're looking for somebody to help, I would love to jump in there. But let's have a conversation about what tripped your lender up, if you know, and at very least we can get a look at where you are and give you some better advice around it. But give us a call off the air at 855-462-7292. But hey, Mike, thank you for that question. So I appreciate that. And, while we're talking about that, I want to share the importance of the key dates in the contract, because a lot of times we get super excited as buyers and sellers, and we're planning our next move, and we're caught up in the moment. And sometimes we overlook those details, on the 15th day or the 10th day or however your agents have negotiated the contract, that deposit is now non-refundable. And as the seller, you want to know what that date is also, because you're not going to get a comfort level maybe until after that the buyer is past the point of no return. So anyway, I share all that just because there are some super important dates in the contract. Typically, you've got a time limit on when you can apply for the loan. I guess let's start all the way with when your deposit needs to be submitted to escrow, when you need to apply for the loan, when you need your loan approval, when the appraisal has to be in, and when your inspection period expires. So those are all key things to focus on. But anyway, I appreciate the question. Hopefully that helped you. So, hey, you hear that? What's that? That's the music rolling up behind me. That means we're going to jump into a short break. We're going to be back in 2 minutes to take more of your questions. Sit tight. We'll be right back. Hey, it's mark-eitel, host of the Mr. Mortgage Show. You hear me all the time talking about the need to have the very best team representing you in a real estate transaction. And that starts with a really great agent. If you've got a great agent, that's awesome. But if you don't, check out www.reallyGreatAgents.com. There you'll find the best of the best, regardless of the city they work in or the brokerage they work for. www.reallyGreatAgents.com. www.reallyGreatAgents.com.
Here's another 5-star review.
As a realtor, I have a bunch of mortgage brokers to choose from, but I prefer to work with Mark and his Mr. Mortgage team. In this crazy market, there is no room for error, especially on the mortgage side. Mark's team moves fast, keeps everybody in the loop, and makes things happen. They always give my clients a great deal and take the time to walk them through every step of the process. When you're considering a lender, I encourage you to talk to Mark-eitel and the Mr. Mortgage team.
Hey, it's Mark-eitel here, host of the Mr. Mortgage Show. And you've heard me talk about the valuation tool that we use in our lending practice almost daily. It's not quite an appraisal, but it's way more accurate than one of those online estimates. And we're happy to run one of those reports for you at no charge. Just visit freevaluereport.org. That's freevaluereport.org. Give us a little information about the property, and we'll be happy to send you your report. That's freevaluereport.org.
Are inflation and everyday expenses eating into your retirement income? Maybe you've considered a reverse mortgage and have unanswered questions like, do I still own my property? Can the bank kick me out? What happens when I die? Can I still leave my house to my kids? These are all great questions. Visit www.moreaboutreverse.com to learn more. That's www.moreaboutreverse.com. www.moreaboutreverse.com.
Welcome back to the Mr. Mortgage Show. Call us now at 855-462-7292.
All right, we are back. My name is Mark-eitel, and you are listening to the Mr. Mortgage Show, and we do appreciate you listening to the Mr. Mortgage Show. And if you've got questions and you want to get them on the air, just give us a call or shoot a text to 855-462-7292. That's 855-462-7292. And we switched over to the toll-free anytime hotline a couple weeks ago because we now have listeners in several area codes. Yep, we're still here local. We're still serving our local community, but we've always originated mortgages throughout the entire state, and we're adding stations to the Mr. Mortgage Network. Wow, that sounds pretty cool, right? Mr. Mortgage Network. Anyway, we're adding stations outside the area, so as listeners are joining us from other area codes, we wanted to make it super easy. So 855-462-7292 is the Anytime Hotline, and today with me in the studio is Jennifer, my producer. She is keeping me in line. She's keeping your questions on the air, and she's keeping this party moving. So, hey, I got a little long-winded in the last break, so I'm going to try to in the last segment. So I'm going to try to catch up some questions because Jen has given me the finger. She's given me the finger, but it's to tell me there are questions teed up. So let me throw it over to her and see what she has.
Alicia is asking, we want to start buying foreclosures. Is there a good website to find foreclosures? We tried looking on the county site, but can't find anything.
Hey, Alicia, that is a great question. So there are two major websites for mortgage foreclosures. So HUD, right? FHA loans are insured by HUD, and HUD liquidates their foreclosures through a website called HUD, HUD, homestore.com. HUDhomestore.com. You can search by state, by county, filter by price. It's a really, really cool website. Not big on pictures, not big on information. Actually, I think that there are still downloadable reports on there. So let me back up. They do give you some information regarding the property, but oftentimes there is no power on at the property. So things like, the AC and the water heater are tested by inspectors that they send out there with generators. So even though that's the case, oftentimes that will be included in the inspection report. So I take it back. There is some pretty decent data around the properties, but HUDhomestore.com is where you'll find FHA foreclosures. And then there's another big website called auction.com, and they liquidate mortgage foreclosures for many, many servicers. So those would be the two places that I would start. As far as county website goes, that's usually for things like liens and municipal liens, tax liens. Those will be advertised through the county website. And if you need more information regarding that, I'm happy to help. But most of the time, people are looking for mortgage foreclosures, and those two websites are a great place to start. So hopefully that helps. But hey, Jen, do we have any other questions?
Scott sent a text. I like what you're saying about seller concessions and rate buy-downs. Is there a limit on how much money the seller can give?
Hey, Scott, thanks for that. We're having a lot of conversations around the seller contributions and rate buy downs. And we talked about it, earlier in the show today. So yes, there are limitations depending on the loan program that you're utilizing, and depending on the down payment is going to dictate how much contribution you can get from the seller. But I'm going to give you a rule of thumb. It's typically somewhere between 3 and 6%. And those numbers will vary based on those other criteria that I mentioned, loan program and down payment amount. And then, VA has its own set of rules, but somewhere between 3 and 6% is often the case. And that's another place that is often misunderstood. Even though you're putting a down payment down, you can put a big down payment down and still get a seller concession. So somebody putting 20% down and it has an 80% loan to forego mortgage insurance can still get a seller contribution to buy rate down, to pay closing costs. So that's a place where a seller concession can make a huge difference, because if you're going to put down 15% and a seller concession can help get you over the hump where you could now put down 20 and use the seller concession to pay your closing costs, now all of a sudden you don't have mortgage insurance. So it's certainly a great conversation to have, and you're going to want your lender and your real estate agent to be acting as a partnership, because if your real estate agent goes out there and negotiates a discount, let's say the house is listed for $400,000 and she gets the listing agent on the seller side to agree to take $385,000, before that contract's written at $385,000, it would be awesome if they can have a conversation with your lender to best determine how to use that $15,000. Sometimes just writing it at $385,000 is the way to go, but maybe writing it at $400,000 with a $15,000 contribution can help you with closing costs and rate buy down. Yeah, I appreciate that question. I appreciate you, kind of focusing in on the conversation regarding seller concessions and buy downs, because we're seeing it more and more. So I appreciate that. I hope that helps, but I always welcome additional conversation if you need it. But yeah, this is fun. We're kind of doing a rapid round of questions here. So let me throw it over to Jennifer to see what else we have. Jen, what else do we have teed up?
Paul sent an email. I really want to buy a fixer-upper. Can I roll some of the repair costs into the mortgage?
Okay, Paul, do you know what you're getting yourself into, my man? Oh, my first house was a fixer-upper. I definitely respect the sweat equity game, if you will. But to answer your question, yes, almost every lender has some type of program where you can roll some of the repair costs into the loan, whether it's an FHA, whether it's a Fannie Mae or a Freddie Mac or VA, or I think USDA even has access to a program that allows you to roll some of the repair costs in. But lots of moving parts around that. So we're going to have a conversation in depth regarding, what repairs are necessary. For example, we were talking about a roof a minute ago. A leaking roof that needs to be replaced is going to be handled differently than, say, remodeling a kitchen. So let's have that conversation off the air. If you're open to it, I welcome the conversation. 855-462-7292 will get us when we're not on the air. So, hey, let's see if we can squeeze in another question. Jen, what do we have?
Candace is asking, we'd like to downsize and buy a small condo. Can we buy the condo first and then sell the house? I guess I'm unsure how homestead and everything will work because we already own this house.
Okay, there's a couple things here with this question. So if you have the ability to buy the condo now, I don't know if you're paying cash, if you're getting a mortgage. Do you have a mortgage on the first property that you currently, or the property that you currently have? I'm not completely understanding all of the moving parts surrounding this question, but as far as homestead is concerned, you can buy the condo and intend that to be your primary residence, and go ahead and start the, homestead exemption filing and file for the Homestead Act once you close. You can do that without a problem. Owning two properties isn't going to prevent you from doing it. You're just basically moving your homestead. And that's a good point. You're going to have portability. So you can port your homestead from your current house to the new house. And portability is something that confuses a lot of people. So maybe we'll do a show on it in the future, or at least a segment around it, because it's super beneficial. And I'm going to say something that's going to be counterintuitive to a lot of people, but sometimes it makes sense to petition your property value to be increased, because then if you port your homestead, it's more beneficial. But anyway, to answer your question, you can buy the condo first and move your homestead over. Now, do you have a mortgage? Are you getting a mortgage? Those are all additional questions that I would need to have a little more information about to have a better opportunity to answer your question. But to stay on the surface with what you asked regarding homestead, it's not a problem. As far as, other strategies around, selling the house and then staying in it, what's called a post-closing occupancy period, and then going out and buying the new property, I'm happy to answer questions around that, or a bridge loan if you need to pull some of the equity out of existing property before you go buy condo. Those are additional conversations I would welcome the opportunity to have with you, but I would need some more information. So I hope that helps. But yes, filing homestead on the condo should not be a problem. But hey, you hear the music? That means another 2-minute break is coming up. We're going to be back in 2 minutes to take more of your questions. Sit tight and we'll be right back. Hey, it's mark-eitel, host of the Mr. Mortgage Show. You hear me all the time talking about the need to have the very best team representing you in a real estate transaction. And that starts with a really great agent. If you've got a great agent, that's awesome. But if you don't, check out www.reallyGreatAgents.com. There you'll find the best of the best, regardless of the city they work in or the brokerage they work for. www.reallyGreatAgents.com, www.reallyGreatAgents.com.
Here's another 5-star review.
My wife and I own a small business. And the way our accountant file our taxes, we don't show much income on tax returns. Because of this, it looks as if we don't make the money. This was a problem for our bank when we applied for a mortgage. But not for Mark. He verifies our income by using our monthly bank statements. Mark and his Mr. Mortgage team made a big difference for me. Yes, I am happy to recommend Mr. Mortgage Mark.
Hey, it's Mark Eitel here, host of the Mr. Mortgage Show. And you've heard me talk about the valuation tool that we use in our lending practice almost daily. It's not quite an appraisal, but it's way more accurate than one of those online estimates. And we're happy to run one of those reports for you at no charge. Just visit freevaluereport.org. That's freevaluereport.org. Give us a little information about the property, and we'll be happy to send you your report. That's freevaluereport.org.
Are inflation and everyday expenses eating into your retirement income? Maybe you've considered a reverse mortgage and have unanswered questions like, do I still own my property? Can the bank kick me out? What happens when I die? Can I still leave my house to my kids? These are all great questions. Visit www.moreaboutreverse.com to learn more. That's www.moreaboutreverse.com. www.moreaboutreverse.com.
Welcome back to the Mr. Mortgage Show. Call us now at 855-462-7292.
All right, we are back. My name is Mark Eitel, and you are listening to the Mr. Mortgage Show. And hey, we appreciate you listening to the Mr. Mortgage Show. So we're going to try to keep some questions rolling. I'm going to throw it over to Jennifer to see what else we've got question-wise. Hey, Jen, what do we have?
Erica sent this text. Why are the taxes on brand new homes so much cheaper? I see it on every new house online.
Hey, Erica, that is a great question, and it's an easy answer. So almost always new construction, when you're looking at the tax amount, it's based on the land only value, because 99% of the time there was no house there the last time the taxes were calculated. So and it hasn't traded yet to establish a new value, but that's almost always the case. You're looking at land-only taxes, and it's super deceiving because that tax amount is going to change significantly when you purchase the property. So I hope that helped. That's one we get all the time, especially now. We're seeing so much new construction, but great question. Hey, and speaking of questions, I wanted to thank everybody for their questions. We had some really, really good questions this week. You guys have come to play, and you're not disappointing. We're super happy to be here on WPSL and have enjoyed all of our time here so far. And I know they let us sneak in just before the big boys come on stage. So I looked out the window and I saw a big, long, stretched black limousine rolling up. And you know what that means? Clay and Buck are on deck. They're warming up. They're going to hit some home runs today because I know there was a lot of big political news yesterday and today, so they should have a blast with the news cycle that we're in. But hey, I've got a favor to ask. If you've enjoyed the show, if any of this resonated, if you think that some of the information would be helpful, please share the show. If you hear somebody talking about buying or selling or refinancing, they're just kind of struggling with what they're seeing in the news, and does this make sense? How do we buy investment property? Is it a good time to buy investment property? Should we even consider selling now? Where are we going to go? These are questions that we all hear every day. And I'm hoping I can count on you to share the show with some people that it might benefit. We're always trying to grow the listenership of the show. We want, to expand the audience and would welcome the opportunity to, dive in and answer questions that anyone may have. So I'm hoping I can count on you to help me Pied Piper the show out there, and let's spread the word because we are having a blast being with you. So as long as Greg keeps plugging us in, we're going to keep hitting the airwaves here because we are having a blast. So, hey, let me see if I can sneak it over to Jen for one last question.
Here's a text from Darren. Why is Credit Karma score different than the mortgage company is telling me? Feels like a scam to me.
Okay, that is a great question, Darren. The Credit Karma scoring model is what's considered a consumer debt model. It's very different than the mortgage scoring model, which is often more conservative, and that's why the score difference. And I know it's super frustrating. It's frustrating for all of us. I wish everybody would adopt one scoring model, and I think we're moving in that direction. But Credit Karma is an awesome tool if you want to just kind of keep a handle on what's happening with your debt. You want an idea of where your scores are going. It's really accurate with like open trade lines, what your balances are. It's just that mortgage scoring model always carries heavy scrutiny. So it doesn't matter if your Credit Karma score is an 850, your mortgage score is going to be lower. It's just the scoring model. So I know it's frustrating and probably not the answer you wanted, but that's just the reality of it. The good news is Credit Karma gives you a pretty good idea of what direction you're moving in. So hopefully that helps. Hey, we've had a great time this week answering your questions and spending some time with you. I know Jennifer always enjoys it. Hey, Jen, how do people get us when we're not on the air? Can you share that number?
They call the Anytime Hotline, and that is toll-free, and I mentioned anytime. On the Anytime Hotline, 855-462-7292. That's anytime.
That's right, the Anytime Hotline. Hey guys, we had a blast this week. We always enjoy spending some time with you. Thanks for spending a little bit of your day with us. As I mentioned, Clay and Buck are on deck. Super happy to be their warm-up show. But we will be back next week, same time, same station. Hey, say goodbye, Jennifer.
Until next week. Goodbye, Jen.
All right. You guys have a fantastic week. We'll see you right back here next week. Thanks.
They call the Anytime Hotline, and that is toll-free, and I mentioned anytime. On the Anytime Hotline, 855-462-7292. That's anytime.
That's a wrap. Join Mark-eitel next week for more thrilling, edge-of-your-seat discussions about real estate and mortgages right here on The Mr. Mortgage Show.
Do you have questions regarding the housing market? Is this house of cards going to come tumbling down? Is this 2008 all over again? What are the interest rate hikes going to do to the housing market? Is it still a good time to buy? Is it a good time to sell? Should you just sit tight and rent? Join me, Mark Eitel, host of the Mr. Mortgage Show, every Thursday, 11 a.m. right here on WPSL. Can't wait until Thursday? Check us out online at MrMortgageRadio.com. That's MrMortgageRadio.com. See you Thursday.